Be Wealthy and Smart, episode 1198.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the crazy boom in tech stocks. Here we go again. Tech stocks are taking off like crazy, and if it wasn't for tech, the S&P 500 would actually be negative for the year. Now, all kinds of things are fueling this. One of the major trends is artificial intelligence, or AI. Just the mention of AI is enough to give Microsoft $500 billion of more market value. It also gave NVIDIA a 26% jump in one day. Now, we haven't seen this kind of craziness for a long time, and it almost reminds me of the dot-com days, when all you had to do is mention the internet or put .com on the end of your name, and suddenly your stock was worth 25, 50, 100% more than it was the day before. Now, instead of it being .com, it's AI. And this trend could have legs for a couple of years. While I think this is a short-term burst in AI, I also think trends like this go on for a period of time. But what I would say is use caution here, because a stock that goes up 26% in one day is not where you want to be buying it, because that creates a gap on the chart, and that gap usually gets filled, which means the price usually comes down at some point to fill that gap. And that's where you might want to consider investing in it if you're thinking about doing that. So I'm calling these things to your attention, not to say run out and invest in them today at all. I'm saying be cautious on them today, but you could make a note of what's happening in these stocks. And if you're a stock investor and you want to add them to your portfolio later when the price comes down and you're able to buy on a dip, that's when you're being a savvy investor. So let's talk about what is going on with tech. First of all, as I said, NVIDIA had better than expected earnings, and they are making chips for AI, and that makes them a Wall Street darling right now. That caused their stock to jump 26% in a day because of those blowout earnings, adding $939 billion worth of value to their company overnight. That also jettisoned it past Berkshire Hathaway's value and made it the fifth most valuable stock in the S&P 500. But NVIDIA is just one example of how large cap technology stocks or mega technology stocks are absolutely fueling the rally in the S&P 500 this year. S&P 500 investors have gained $2.6 trillion in value in 2023 alone, and NVIDIA accounts for 23% of that gain by itself. If you excluded the top 8 S&P 500 stocks this year, the S&P 500 would actually be down 0.3% instead of being up about 8%. But that crazy gain in one day in NVIDIA isn't the whole story. It's actually up 160% in 2023 so far this year, and it's only May. But it's not just NVIDIA that has been doing well. Many tech stocks have been doing well. Did you know that Apple's market value is close to $3 trillion? And it's up 33% this year. Microsoft is valued at $2.4 trillion, and it's up 36% this year. Alphabet, Google, is valued at $1.6 trillion, and it's up 40% this year. Amazon, valued at $1.2 trillion, up 37% this year. NVIDIA, as I said, almost approaching $1 trillion in value and up 160% this year. Facebook, at $600 billion, is up 110% this year. And Tesla, also $600 billion in market value, up 50% this year. These tech stocks have really been boosting the S&P 500, and it's, again, a narrow market of just a handful of stocks that have been really driving the performance. When you get a narrow market like that, where just a handful of stocks are providing most of the performance, that's usually the sign that you're at some sort of a peak. But on the other hand, we've seen that happen in the past, and that trend has been able to continue for a period of time. So we can't really use it as a short-term timing mechanism. What I would say is that we're getting some speculation in the market, and right in time with these debt ceiling talks, we're sort of setting up for what I think is a manufactured crisis. To me, it feels like the market is being jettisoned higher, and we're going to have some sort of bad news about the debt ceiling, which is going to drop the stock market and cancel out a lot of the fast gains that people have just made in technology. That's because the market is run by bots and by AI these days. And so they play on market psychology. And as we get into euphoria, that's when the bots turn and they short the market and they drive prices down. It just feels to me like this is sort of the time horizon where we're getting into that. And I've been warning about potential weakness in June. So be cautious. Don't take this as a reason to go rush out and buy these speculative performers right now. Rather, mark them as something you want to watch for a while and wait until they become weaker. That's the time to start accumulating, is on the dips. And when they become weak, that's the time you can buy these strong performers who will usually bounce back when the market gets stronger again. I do think the second half of the year we will get a strong stock market, but I do think we're going to have some sort of manufactured crisis with the debt ceiling and weakness in June. That could be from the lag time that I've been talking about with interest rates, where because interest rates were rising, it was slowing the economy, but there's a lag time before we actually see that slowness. We did get a little bit hotter inflation numbers this month. The increase for April was 0.4%, which puts it at a 4.4 annual increase, which was a little bit more than what Wall Street was expecting. So inflation was a little bit higher, but the stock market took it in stride and still rallied sharply. But the improvement in inflation is a lot better than where we were. So it's trending in the right direction, even though we may have these month-to-month aberrations. But overall, the trend is for lower inflation. That's good news. The bond market is telling us lower rates in the future. I do think we are going to see lower rates in the second half of the year. That could be from economic weakness due to the lag time. It could also be from housing slowing down and issues in the banking sector. We haven't gotten out of the woods yet with problems with money moving out of the smaller banks into the larger banks. So I wouldn't be surprised if we got more bad news in the banking sector. I don't think that's over yet. So stay tuned. Right now, everything's focusing on the positive. They're driving the stock market up, but I do think that's about to reverse, and we're going to see some weakness in June. That may give you an opportunity to buy some of these very exciting performers. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button so you'll be notified as soon as new podcasts are available. And all of my podcasts are in my wealth mentoring library over on my website at lindapjones.com/podcasts. And while you're there, sign up to get my free report, 3 Easy Steps to Maximize Your Wealth. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.